Shilling touching a record low once again yesterday of 107 against the dollar, spiking treasury yields, luring investors into the fixed income market. Where to from here for the equity market?
Thank you very much, Samantha. Very good observation there, especially concerning how our market has behaved in the recent past. Looking at it in terms of, first of all, the turnovers, just like you mentioned, you've been seeing that they're relatively flat in terms of the performance of the market, and it's already an indicator that there's a bit of a shift into the fixed income markets. And when we see the forex situation being as unstable as it is right now, and also seeing some of the interest rates that are coming through in terms of the fixed income segment, we are seeing a lot of shift towards that front. But looking at it in terms of the equities market, there are a lot of bargains that are available right now. Most stocks are trading with very, very low PEs. And just like you mentioned, you're also seeing some bit of interest in some of the agricultural stocks, mainly because of what we are seeing in the forex market.
When are we expecting banks to start responding to that increase in the central bank rate to 11%? So far to date, they haven't hiked rates, but of course it only has been 1 week. KCB said it will take at least 2 months before they start hiking rates.
Well, look at it in terms of how banks' reaction. Definitely, it's a bit of an unstable or uncertain situation because most of them had already taken positions prior, and the situation right now looks a bit like it's getting out of hand, and most of the people are now watching central bank to see whether central bank will come up with still another measure to try and strengthen the shilling. But look at it in terms of the medium term, especially short term. We should be expecting banks to be a bit more cautious, especially in terms of exposing themselves too much, just to be safe in terms of the direction of the shilling. Right now, I guess we are in what we can call uncharted territories, and because of that, it means more of almost a day-by-day review and monitoring of the situation.
Would you be buying into conservative banks, the likes of Barclays or Standard Chartered, or going for the more aggressive banks like KCB and Equity Bank?
Well, looking at it in terms of the macroeconomic environment and the fundamentals that you're already operating in this situation, as well as the economic outlook right now does not look very good for people who are very aggressive. So I'll be very careful in terms of some of these banks that have been going up front in terms of the expansion, as well as some of these other measures. But look at them specifically in terms of the price to earnings ratio. Some of the banks that are still performing in terms of the PEs that are well below 10 are very, very promising. I'm looking at Barclays right now. I'm looking at Kenya Commercial Bank. Even Cooperative Bank is very attractive.
Cooperative Bank, the most actively traded stock yesterday on the bourse, easing slightly, but trading at around 14 shillings. You say this is a good entry point for the smaller bank?
Yes, definitely. Looking at it in terms of even the technical point of view, Cooperative Bank has traded a high of 21 and now at a low of 14. And also looking at it in terms of the expansion and even their branch network, especially in terms of the cooperative movement, that positions them very well in terms of they're being able to sustain their performance. I guess the only concern right now would be for banks, interest income might be a bit affected because of some of the loans that they already are taking positions on, especially because of what we are seeing in terms of the interest regime. But hopefully going forward, we'll see the quarter 3 and quarter 4 results being positive for some of these institutions, and hopefully going forward.
News flow just out this morning is that banks have agreed to a 20% pay rise for non-management staff. How is this expected to cut into costs on the, of course, operating side of the business?
Well, definitely in terms of their top line, especially things like salaries and wages, definitely that would affect their performance. And what we are seeing in terms of banks right now is that what we saw even from last year, they're already trying to see whether they can be able to streamline their operations and keep just the core staff in terms of their payroll. And definitely that would be what would be expected right now. If at all they're going to have to raise the salaries, they might have to review and try to see whether they're going to send off some of their staff so that they can be able to adjust to some of these proposed changes. But hopefully even in terms of performance, we'll see more loyalty, because another concern for some of these banks has been the risks that they have been experiencing, especially in the recent past, in terms of the frauds that come along with internet banking. But definitely now that they're going to be able to take more care of their employees, it's going to turn into more profitability for them.
Let's move our focus to the agricultural sector. Of course, agricultural stocks are pure play on the weaker shilling, earning the majority of their income in dollars. We see a lot of activity around Pinga, especially that stock rallying 14% in the past 2 days. What is your preference in the agricultural sector?
Thank you very much. We're looking at it in terms of the agricultural sector. Most of this year, the agricultural sector has not attracted too much attention, especially because of what we saw, the rains coming, not being as stable, and also looking at it in terms of the output. But definitely going forward, especially because of what we are seeing in terms of the shilling, some of those stocks are becoming very attractive right now because the weakening of the shilling is encouraging their performance. And just like you mentioned earlier, we are seeing favorable prices for some of their output, and some of the stocks like Rea Vipingo, we are seeing a bit of attraction in terms of those fronts, especially because they're just about to be announcing their results, and their half one results were fairly stable. And so going forward, I think some of these agricultural stocks are some of the ones which most investors are trying to be keen on. You mentioned also Sasini earlier, and hopefully they're going to be able to at least perform in terms of bringing a bit of interest in terms of the market.
Now, a futures market is expected in 2012. How do you think the investment community will respond to this new asset class on the equity front?
Well, definitely that would be a very, very welcome move. Our market has been fairly more of just equities, and hopefully we can be able to bring in more products like futures, especially for commodities like the agricultural stocks as well as oil and other such products. We should be deepening our market in terms of providing more opportunity for players to be able to take positions in terms of the market. And hopefully, once we put in very stable structures, those are some of the things that will be able to bring in more liquidity in terms of the market, and hopefully try to deepen that kind of activity we are seeing on the equities front.
Lastly, let's just end off with the Jumia, that of course the retailer there. How possible is it for Jumia to pass on high inflation to customers at this point in time? Many saying that it is offering value to customers, that it will entice customers away from high-end supermarkets. What are your thoughts on that?
Well, looking at Uchumi, definitely right now that's one of the companies that we can say is in between a rock and a hard place, especially looking at it in terms of the operating environment that it is in, but definitely in terms of the strategy that Uchumi has adopted, and it's trying to adopt, especially in terms of trying to control expansion but still be able to lure investors through loyalty. Definitely that will be able to boost their performance. But in terms of pushing some of these costs to their consumers, definitely that will be something that might be a bit of a challenge, especially looking at it in terms of the competition that is operating in. And so most of that might end up being something that they might have to absorb, and right now trying to see whether they can be able to still boost their volume so they can be able to still sustain their bottom line.